Court. And so welcome home to all of our future home buyers. This is our Fusion Properties Home Buyers Seminar. It has been such a while since we've done a home buyer seminar, and the Lord really laid it on my heart. There's so many people that want the information, need the information. And so this is being brought to you by our Fusion Property team. We have some incredible agents that work with us. I want to give a shout out to all of them just for being a part of the Fusion family. So Sherrod, Paulette, Tamika, Michael, he's not here tonight, they're just all incredible agents. And who am I in case I've not had the chance to meet you? I'm Garlinda Price. I'm the broker in charge and the owner of Fusion Properties. We launched, I started Fusion Properties back in 2011. So I'm going into, I cannot do the math, but I'm going into my double-digit years of selling real estate since 2009 and then owning the firm since 2011. And then you'll see a little scripture at the bottom, Matthew 7:7. And the reason why I'm incorporating scriptures because God is in all things for me, right? And and all things for you too, right? But that verse of scripture says to ask, to seek, and to knock, right? He said, all who ask receive, all who seek find, and to all who knock, the door will be open. And so we're believing God on tonight with you that if it's your desire to own a home, that if you ask God, seek out the information, which is what you're doing tonight, knock on the door, which is to complete the information we're going to share with you tonight, that you will achieve the dream of home ownership. So that's who we are, and super excited that you're here. Now I'm hoping that my screens will work. Okay, so home ownership is an obtainable dream. And if you're ready to do the work, we're ready to help you find your way home. And what do we mean by that? Depending on where everyone is in their journey of home ownership, it's a process. Right? It takes time to get your money together. It takes time to get your credit right. Sometimes it's a debt to income issue. Sometimes it's just finding a home, right? Especially for any of you that have been in this crazy COVID real estate market, it's been really tough, right? With roughly less than 600 homes on the market, it's like looking for a needle in a haystack, where normally we would have had 3,000 to 4,000 homes on the market. So literally we're operating on a skeleton, crew as it relates to looking for homes. Here are some quick facts that I love to share. Now, these are not Garlinda facts, right? These are the National Association of Realtors facts. So home and ownership has advantages and disadvantages, right? Whenever something breaks down, you can't call the landlord, you are the landlord, right? Whenever there's a struggle making payments, you can't call the landlord and be like, hey, I'm gonna be late this month because, the mortgage company doesn't want to hear that. And so there are programs out there in the instance when those things take place, but sometimes it's not always the best choice at a given time to purchase a home. You want to be financially ready, and you want to be on great footing. And so that's what we're here to help you do. And buying your first home requires planning and savings, right? We're going to share estimates of how much you possibly need down. I just realized that I didn't put that slide in here, but if someone can remind me at the end, if I don't go over the costs or the expenses that you'll have when it comes to purchasing a home, please remind me at the end. And then we're going to help you prepare a checklist and help you shop for your new home. Why? Because we want to. We know the way. We know how to help you get there. And we're going to connect you with our lender partners that are going to help you receive a roadmap and become pre-approved for a mortgage. What does that mean? A lot of times, and in the past, when there have been different mortgage lenders that reached out, wanted to work with us, they wanted to do everything through technology. But I believe, and I feel like, and then they would have follow up telling the client what's their roadmap. I believe that if someone is going to work with you and your team, meaning you are the one that owns this whole team of realtors, lenders, inspectors, and all these things when you're purchasing a home, that we work for you, right? And what you should be able to expect from us, and especially from the lender, is when you call them, for them to say, okay, taking a look at your credit, these are the things you need to work on. These are the bills you need to pay off. And if you do this, you will own a home by this date. There's that type of software out there. So we have some really great lender partners that do that, and they can help you become pre-approved for a mortgage. And I just want to state right here that there's a difference between being pre-qualified and being pre-approved. Pre-qualified means you picked up the phone, you called a lender, or you completed the application online. But that lender or that person that's giving the money for the home, they've not seen any of your documentation, right? Pre-approved means they've seen your documentation, they've verified your W-2s, they've looked at your taxes, they've seen a good financial picture of what you look like in terms of as a buyer and a buyer risk, for them to lend you money. So when it's time to purchase a home, you want to be out shopping with a realtor from Fusion Properties with a pre-approval. If you have a pre-qualification, we're going to get you back to your lender to get everything sent over to them. So then we're shopping with a real number, right? And then there are several government programs out there for first-time home buyers, move-up buyers, luxury buyers. We work the vacation home market all the way down New Hanover, Brunswick County. I'll tell you where we work. And we work with low to moderate income home buyers. So everyone purchasing a home is not buying a $200,000 home, right? Sometimes people can only get approved for $85,000, $100,000, $115,000. Does that make it tougher? Yes. But can it be done? Yes. It's just a matter of lowering expectations sometimes as it relates to what they're looking for, or waiting, or accessing the down payment assistance money we're going to talk about coming up soon. Okay, so welcome everybody. Just want to share with you all that I am recording. So in case you don't want to be on film or on camera, you can keep your cameras off. Also, we're going to have a question and answer session at the end. And if you have a loud background, be sure to stay unmuted. Be sure to stay muted. You may have to ask to unmute to ask the question. I'll figure that out though at the end. So home ownership is the American dream, right? And these are, again, NAR statistics. It's been proven that homeowners have better health. Children do better in school when their parents own a home. People live longer and have a greater sense of community and connection because they feel like they have roots. And people who own homes tend to save more because of the tax benefits, right? So there's savings associated with that. And then I think we talked about that, so I'm going backwards. Let me see why it's not letting me go down. So here are some advantages of home ownership. It's a forced savings plan, right? Because your mortgage principal payments are retained as equity in your home. So your home and owning a home is almost like you owning your own bank, right? Now, I'm not saying that you should use your home like the bank, but it's almost like owning your own bank. It's also usually a good long-term investment because it's gonna grow in value. And most likely over time, which is over the last 100 years, homes have increased in value anywhere from 2% to 5% on average. And that is higher than a savings or a checking account. So when you think, okay, where should I put my money? And why do most people invest in home ownership is because you're going to make more money in owning a home. If you needed to borrow money from yourself, you're going to make more money borrowing from your own home, right? And then I think in the last 2 years, homes have literally doubled in value. I remember back in 2008 to 2011, a home that we currently have on the market was flat. It was valued at the same thing from the day we had bought it, and we had owned it at that point about 10 years. Now that same home, if we were to go to sell it, has doubled in value. So home ownership is an excellent opportunity for you to build and grow wealth. Then you have qualified tax deductions because you can write off your property taxes and you can write off your interest payments from your income tax, and that allows you to keep more of your money because what it's doing is it's reducing your taxable income. So therefore, you have a better chance of keeping more money in your pocket. And then over time, mortgage payments become cheaper in real dollars, and it's cheaper to own than rent. So right now, if you were to look at, let's say, a 2,000 square foot home for rent in Fayetteville, even though there's nothing on the market for rent, right? You can end up paying upwards of $1,200 to $1,500. I know people that are paying $2,500 a month in rent. A $2,500 mortgage payment would get you about a $500,000 home. I'm exaggerating, but it's going to get you somewhere close to have. So think about how much money you could be saving by becoming a homeowner. And then home ownership gives you a vehicle you can borrow against, right? For college, to purchase a car, to do a home equity line of credit, to pull money out of your equity in your home to start a business. It has all of these advantages. And then as equity builds up, you can step up to a larger home or borrow against that home to finance larger purchases like we just talked about. Home ownership can also enhance the family's sense of control over their lives and their environment, promote stronger community ties, and it allows you to leave an inheritance or sellable asset. Well, what do I mean by that? How many people do you know that their grandparents left them land, or their parents left them land, or their grandparents and parents left them a home? Well, maybe they didn't want the home. Maybe they weren't going back to that area. So now that family member set them up to own an asset that they could sell and profit from that they never paid a dime in, that they never put a dime into it. So this is what we stand a chance of doing for our children and our family members when we own a home. And then you can customize the home to suit your special needs. And it's not always allowed when you rent, right? Sometimes you can't paint and put holes in the wall or do what you want to do, put a little garden gnome outside. When you own, you can do that. Here's some of the disadvantages to home ownership, and we'll just breeze through these, but you have monthly payments, right? You have principal, interest, taxes, and insurance. And it says maybe higher than rent payments, but that's not the case here in our market right now. You must pay for regular maintenance and periodic repairs. We talked about that. So in the beginning, we said you can't call the landlord. It falls on you to take care of these things. Owning is less flexible than renting, because it says most first-time home buyers live in a home for 7 years, but this number really is getting larger. Like the last time I checked, most people were living in homes 11 years or longer. So it's not as flexible, but when you use the down payment assistance programs we're going to talk about, with a lot of those, you do have to stay in the home a certain amount of time to not have to pay it back. And then like any investment, there's no guarantee that the value will increase, which is what we saw back in 2008 when the market crashed. So how can you prepare for home ownership? So buying your first home involves planning and saving. And in today's time, you'll need money to put down. There's just no way around it. So what we want to talk about right quickly is, where can you find the money? We have that on another slide. But what I want to share with you is you will need money for a home inspection, which averages around $450 to $525, depending on the home inspector you use. You will need money for a termite or a pest inspection if you're not using a VA loan. That runs anywhere from $75 to $100. You'll need money for an appraisal. And what the appraisal does is that's the person that goes out and determines the value of the home to make sure you're not overpaying for the property. Right now, everyone is overpaying for properties, right? Because homes are selling above asking price. They're selling above the appraisal value. And so that's why I said in the beginning, sometimes it's best to wait to purchase a home if you don't want to do that or not able to do that. So your appraisal is going to run about $500 to $550. So those are going to be 3 upfront expenses that you'll need money for. So you need $400 to $500 for a home inspection, $75 to $100 for a termite and pest inspection, and $500 to $550 for an appraisal. And then you'll need not down payment assistance, you'll need due diligence or earnest money deposit. And we're going to talk about that right quick. If you're taking notes, due diligence money is the money that's non-refundable. That's the money that you give to the seller for them to take their home off the market, for them to give you the opportunity to purchase it. And it's non-refundable. For no reason at all will you get it back unless the seller was to walk away from the transaction. But when you go to closing, you get that money back in terms of a credit. So you do get credit for it if you buy the home, but if you don't, you walk away from it, you don't get it back. Well, due diligence is going to be anywhere from $500 on up. I've seen $500 due diligence fees. I've seen $1,000. I've seen $10,000. I've seen $20,000. I've seen large numbers of due diligence fees. It normally would depend on who the seller is, the price of the home, and what you all negotiate. That's why you want a realtor, right? You want somebody to be helping you during that negotiation process. And then your earnest money deposit is the same thing. It's money that you give to the seller to take their home off the market, but it's refundable. It goes into an escrow account to be held at the attorney's, or trust account to be held at the attorney's office. And that's money that you also get credit for. But if you say, hey, I'm not going to buy the house, I have a headache today, or the person made you mad, or something happened where you walk away from the transaction, you get your earnest money deposit back. So be sure if you have questions around that to ask me at the end. And we're going to talk about on a different slide where you can find the money and get the money for home ownership. And then you want to attend a home buyer education class to help you prepare for home ownership, just like this one. But also here within our local community, there is an organization that provides a home buying class, right? You can sign up for home buyer training or home buyer certification. They have a Saturday class, but you can actually go in and sit with a housing counselor. They will help you create a budget. And in putting that budget together, they help you prepare to get to the steps of home ownership, to include your credit, lowering your debt to income ratio, and everything that you need basically to have your hand held to get to the home buying process. And we've been partnered with them for about 10 plus years. I love working with them, and their housing counselors are certified. So now if you hear people say that they have housing counselors, if they're not certified by HUD, by a government organization, they're not real housing counselors, okay? So that's how you know whether or not they're legitimate or not. And then explore alternatives to conventional single family detached houses. Consider a condo. Like back in the day, I would tell people, don't buy a condo, even if Jesus said, hey, here's $1 to buy a condo, because there was 5 years worth of condo inventory and townhome inventory literally just sitting on the market. Now that doesn't exist. There's hardly any out there. So Consider buying a condo, consider buying a townhome, consider buying a manufactured home, right? You can buy a manufactured home on a permanent foundation. A manufactured home doesn't have to be a mobile home. It doesn't have to be a mobile home on a permanent foundation. A manufactured home could be a stick-built home that's brought to the place where the lot is and built on site. And these are some really great homes. That's something to consider. Consider an older home. Even though it's going to need work and it's going to need you to put your elbow grease and some TLC into it, you can make it your own. So sometimes we have to change our expectations of what we expected a house to look like, and we make it a home. We decide on that, right? And then consider moving to a different part of town or a different city or a different county or a part of city or the city or the county where they offer home buyer incentives. We're going to talk about some of those programs on a different slide as well. And then looking for a home in today's market is going to require flexibility, and you're going to have a vision, right? A lot of times in the past, we would take home buyers into a home. This is when there was a plethora of inventory, and they'd be like, oh no, I don't, not that carpet. No, I don't want carpet. I want all hardwood floors. I want all stainless steel appliances. I want a fence. I want blinds. And you could really, take your pick of the litter. But that's not the case now. Because there's such a small supply of homes, you want to think about, when you're working with your fusion agent, what's important to you? What are your non-negotiables? What are your must-haves? If this home doesn't have it, I'm not buying it, like a fireplace or a garage, or in the area that you want to be in. Is it 2-story or ranch? Those are maybe your non-negotiables, but whether or not it has stainless steel appliances, carpet, or hardwood floors, if the walls are purple, orange, and green, that's cosmetic, right? So that's where you want to adjust your thought process around, okay, I love the bones of the house, but I can make it a home with my personal touches. There's Paulette is on here with us. So she's one of our incredible agents here at Fusion, but she also does staging. A fabulous job at that, right? So that's a service that she offers. And then dated bathrooms. It might have your grandma's pink tile depending on when you bought it, right? But you can change that stuff. So credit, let's talk about it. So one thing I would encourage everyone to do, don't be afraid to look at your credit, right? I remember a time in my life where I didn't want to open the mail. I remember a time in my life where I was like, my credit score was a hot mess.com. As a matter of fact, we went to purchase our first home in Virginia. I had the guy pull our credit, and he called me, he was laughing. And he was like, you're not serious about buying a house. So see, we're way more gentle and kind than that. He was not kind at all. But what he did do was say, Garlinda, okay, after he stopped laughing, these are the things you need to do to get your credit in order so that you can purchase a home. I did exactly as he said, and I bought a home, right? So we know the way to recovery. We know the way to help you get where you want to go. So if you can, pay off your debt and delay major purchases until after you purchase a home. Do not buy a car before you buy a home, period, right? Especially if you know that you have limited income, or if you already know that your debt to income ratio is kind of high. And I know people will tell me all the time, I've heard everything in 14 years, right? I really need a new car. But if that thing literally is not running on 4 flats and falling apart, and you don't need an engine, and you're just driving it back and forth to and fro to work, do not buy a car before you buy a home. It will lower the amount of the home that you can purchase, number one. It may throw you out of qualification because of your debt to income ratio, and it should always come secondary to a home purchase. Now, if you've already bought one, nix that. There's nothing we can do about it other than you could potentially refinance the car. Yes, it will drag your payments out longer, but it's going to reduce the amount of your monthly payment on your car. That's number one. It will start your car payment over, so you could lose a year or two of the time you've been paying on it, but it will free up income for you to be able to purchase your home. Think about doing that. Pay on time, right? I know that shouldn't need to be said, and you're probably like, well, Garlinda, we already know that, but late payments affect your credit worse than no payment at all. Literally, if you didn't make a payment at all, it's not as bad as if you paid late. Late payments will throw you out of qualification. If you have one late payment, you have to wait a whole year. So every time you pay a credit bill late, a car bill late, a rent, maybe not rent payment, but anything that can be tracked through your credit history, every time you pay it late, add a year to buying a home. No way around it at all. Maybe in a 0.555% chance, maybe, but it's doubtful, right? I'm gonna ask Tiffany if she can unmute right quick. and tell me how they look at it when she's working with credit clients and things like that. I'll wait for her to unmute. So I'll talk until she pops on. But get a copy of your credit report to see if any. Tia.
Yes, I'm here.
Okay, so late payment, right? From a perspective, I'll look at that as worse than late payments, or how do you, I mean, worse than no payment at all? How do y'all look at that?
It's about the same, Garlinda. You hit it on now. Making a late payment will bring that credit score down tremendously. But making a late payment or no payment it's about the same, but definitely making that late payment will bring your credit score down. And then this is the thing, when you make a late payment, it don't look responsible. So the lender wants you to make a statement to them on why that late payment was behind.
Mm-hmm. So like what she just said is that 0.55% chance where they'll say, okay, let's see if there's a reason. Mm-hmm. And the reason normally would have to be really good, other than, you know, I forgot, or other than I was deployed, because I've even had military people that, thank you, Tiffany, I've even had military people that were deployed, came back and forgot a bill. But the thing is, all their other bills were on auto pay. So the lender wouldn't accept the fact that that one payment was late because they were responsible enough to set everything else up on auto draft. So it's honestly gonna depend. I'll give you an example. There was a lady that was also purchasing, she was purchasing one of our listings, and something dreadful and drastic happened to her fiance, and he was no longer living. And so when she then went to keep going through the purchase process, the lender said, okay, she was late on her rent, I believe, but because it was such a catastrophic event, they said, okay, what we're going to do is we're going to wait 30 days and we're going to see where you are within the 30-day period. And they let her continue on with the home buying process. But I mean, that was something so far-fetched that normally doesn't happen to most people. So that's that 0.55%. So in other words, pay everything on time. And let's say that from starting today forward, let's say you had stuff that was late in December. We can't do anything about that, right? But from January to January this year, we can work on getting you ready to purchase your new home. And then get a copy of your credit report. You can go to freecreditreport.com. And when you go there, you're allowed to order 1 copy a year. But the best thing that I encourage you to do is, if you really genuinely want to see where you are as it relates to the home buying process, rather than pulling it yourself and looking at it and being like, I have no clue what I'm looking at, because some of that stuff looks like algebra. Let us connect you with our lender partners, and then they can pull your credit for you, and then they can give you the roadmap, because you may think you have to pay something off that should be left alone. You may think that there's something you need to work on, and they say, no, you're good here, go establish new credit. You don't even need to do anything, but go get a new credit card. They're going to know the way to recovery and the roadmap, versus us trying to self-medicate and figure it out on our own. And then if your credit is not great, we can connect you with incredible housing counselors, right? They know the exact way to get to, they know what the banks want. They know what the down payment assistance is required. They know what the state requires to give you money for down payment assistance. You just have to trust the process, and we're your team, right? So you have your broker, you have your housing counselor, you have your mortgage lender. That's the team that you need to get you where you want to go. You don't want to try to do it on your own. And you want to set realistic goals and timelines, right, as well, to get there, because it may not happen overnight, but it'll happen. And then never close out a credit card, right? I don't care if you paid it off till it was 0 and you hadn't used it since Jesus was a baby. You never want to close out a credit card, because that is still established credit. It still helps your credit score. It doesn't move it up or impact it in any way, but it will impact it if you close it. If you close a credit card, you could lose 50 to 100 plus points. Right? We've had that happen to people when they were in the home buying process. They ended up paying off the credit card because that's what the lender told them to do. But the lender said, don't close it out. But they self-medicated, closed the account out, lost 150 points. So you never want to close out a credit card or a credit account that you have in your name, even if it's paid off. That if I can't tell you anything else, take a screenshot of that. Don't do it, right? And then call the creditors and ask for a lower payment. Most would rather have something rather than nothing. You would be surprised. I remember when Marvin and I were going through negotiating a payoff for a bill, and it was like a $4,000 balance. They took $800, right? So we don't know if we don't ask. We have not because we ask not. So don't think that because whatever your payment is so high that someone might not be willing to negotiate, because it's been sold sometimes so many times that by the time the person you're negotiating with is telling you you owe them money, they're not even the original lender. And if you work with a housing counsel or a credit repair professional, they will actually show you how to create the letters or create the letters for you that make the lending company or these creditors prove that it's your bill. If they can't prove that it's your bill, they have to take it off your credit, right? So I want you to be sure to talk to us about that when you come through the process of reaching out to the person that invited you, or the person's page here at Fusion you saw it on. We can talk about that when we get to that. Okay, show me the money, because that's what everybody wants to know, right? Where's that free money that I can buy a house? So let me just see down here in pink, there's technically not a no money down at all program, right? No such thing as no money down at all. Because I just told you that you needed almost $1,500 to $2,000 when you're buying the house. So that's money down, right? So there's no such thing as you need $0 to buy a house. Now, can you get money back at closing? Yes. And we'll talk about that when we get to the process of you being under contract or going under contract. You can get money back, right? So show me the money. Down payment assistance is available. And in most cases in North Carolina, it takes 6% of the purchase price to buy a home. What does that look like? Let's use round numbers, right? Because I don't have a degree in math. $200,000 home, you're going to need $12,000. $100,000 home, you're going to need $6,000. But it doesn't all have to be your money, right? An $80,000 home, you need $4,800. It doesn't have to all be your money. 3% of the money can be yours, and 3% of the money can be somebody else's. But as it relates to some down payment assistance programs, it can all come from the state or whoever has the down payment assistance program. The only thing you're going to be paying for is what? Your home inspection, your appraisal, your wood destroying insect report, and your due diligence and your earnest money deposit. But this 6% you need can come from other funding sources, and we're going to talk about that. So there is money available for all home buyers, not just first-time home buyers. Did you know that you're considered a first-time home buyer even if you've owned a home for more than 3 years? Right? So if you've owned a home for more than 3 years and you say, hey, I want to go buy another home, there's some caveats to that. Let's say you've owned a home for more than 3 years. You could still be considered a first-time home buyer and use an FHA home loan as long as that home is, I forget how many miles away. Tiffany, if you know, let me know. I believe that home has to be either 45 miles away or 100 miles away. It can't be within driving distance and use an FHA loan. We're going to talk about that loan type. If you're VA, you can use your loan multiple times. We'll talk about that again. If you're using a USDA loan, which we're also going to talk about, you cannot own any other types of real estate, right? So money is available based on credit and debt to income ratio. So in order to get down payment assistance, you have to have good credit. You have to have debt to income ratio that's within the parameters that the lender will tell you about, right? And these are two of the programs that we can tap into and have access to, and there's more, right? But these are two of the best ones. You can get up to $8,000 for your closing costs. See up here where I said you need 6%, right? So with this $8,000, you're still gonna need your own 3%, but you can take this $8,000 to pay half of that 6 that you need. You still need some other money, but this can be used towards your closing costs, and you can use it to buy down your principal. What does that mean? If you're buying a $100,000 home and you need $6,000, you can use $8,000 of that money to pay that $6,000. Then you can use the rest of that, I believe, for your appraisal and things like that. So that's an $8,000 loan. You have to live in the home for, I think it's 11 years to not have to pay any of it back. But if you stay in the home 5 years, you pay the money back. If you stay in it a certain rest of the number of years, I don't know all those specific numbers, but you pay it back in prorated portions, right? Our housing counselors would know that. And what does that look like? That means when you go to sell the house, before you make any profit at all, you got to give the state your $8,000 back. What if you're upside down? What if you go to sell the house and you don't make $8,000? You're only going to make $3,000. Then you're going to have to take $5,000 out of pocket, give it back to the state of North Carolina because they gave you the money to purchase the home. And then we have access to a newer loan program. Funding is $30,000 up that you can use for any reason at all to pay all your closing costs. Now, the only thing about this program is because it's so new, they have not decided how it will be paid back. So they don't know if it's going to be forgivable, where you never have to pay it back. I'll check the chat one second. They don't know if it's going to be forgivable, where you never have to pay it back, or if you have to stay in a certain amount of time to not have to pay it back, or is it going to be a balloon payment, meaning come 15 years, 20 years, you got to pay that $30,000 back in a lump sum, right? So that's not been determined yet, but I mean, that is a lot of money to use towards your closing costs. You can use it to buy down the purchase price of your home. For example, if you're buying a $200,000 home, you can take that 200,000 and add that 30,000 to it, and you can end up buying a $230,000 home. Let's say that you're buying $100,000 home, but all the homes you see that you love and like are 115 to 130. You can take that 30,000, add it to your 100,000. So you can use it any way that you want during the home buying process to help even bridge the gap between your pre-approval amount and the amount you actually need for a home. Let me just see if there's a question in the chat. Okay, thank you, Tiffany. Yeah, if you have a question, let me know, pop it in the chat, or if there's a raise your hand feature on your side. Okay, so that's where, those are two loan programs, two money down payment assistance programs that we have here in the state of North Carolina. We go to the next. Okay, so there's also money available in economic empowerment or opportunity zones, right? So often there's an area in the city where they're trying to clean it up or make it better, and it's called an opportunity zone. And if you purchase any type of real estate within that hub zone or opportunity zone, then there's down payment assistance oftentimes available to live in that area. Now, it may not always be in the area that you want to be in, right? It just depends on where it is. And so how you would find that out is you would partner with us here at Fusion. We would call the city and say, hey, we're the economic empowerment and opportunity zones where you all are offering incentives for home ownership. There's also money available to certain professions that to live in those opportunity zones. You ever ride through neighborhoods and you see a police car, or you see a first responder, or you find out there's a teacher and they're living in an area where you're like, what's policeman doing living over here? Well, they may have received money to live within the opportunity zone or the hub zone, and they've received down payment assistance to do so, right? So there are programs out there also for policemen, teachers, first responders. You can also borrow or receive 3% of your closing costs needed from a family member. When I say borrow, I don't mean a bank. I don't mean go get a $3,000 loan. I mean a 3% loan from the bank. I mean, you can go to your family member, if you have that family member, and say, listen, I need closing costs for my home. This is how much I need, and this is how that works. Let's say Sherrod is my brother, and Sherrod is going to give me money for down payment assistance. Then what I could say is, Sherrod, okay, in order for you to give me the money, the lender is going to have something called a gift letter. It's a sheet of paper, a document they already have in place. It's a template. Sherrod would complete the gift letter. I would complete the gift letter, and Sherrod has to agree to allow his bank statements to be reviewed, right? They have to see where Sherrod had the money, gave me the money, and then I have to show my bank statement showing where I received the money from Sherrod. So if you have a family member that says, hey, of course I'll give you the money, like I just closed with a family probably 2 months ago, and the sister gave the other sister the money. But guess what? The church was raising money for her down payment. I mean, for her closing costs. But what happened was when we called the lender and said, hey, can the church give the money? She said yes, so it had to come from one account. So it couldn't be 10 people from the church giving her $500 or $50 or $100. They had to give all the money to the church, and then the church could write the check for her closing costs, but the church had to be willing to show their bank statements. So now, so just be reminded that when you ask somebody for the money, whether it's an organization, an institution, or a family member, they have to be willing for that bank statement for that particular month to be shown to see where they had the money, where the money left their account and went into your account. Okay, but that's one way to get the money that you need. Turn off cable TV. Half of y'all on here, none of us probably have cable TV anyway, but if you do, reduce some of the cable TV subscriptions. Stop eating out and cook at home. 1 year I looked at how much I had spent on eating out. It was a sin, right? So I'm sure there's somebody at home or just laughing, they can relate to what I'm saying. It was a sin how much I had spent eating out. So just stop eating out. Drive only to work and incidental so you can save on gas. Cancel all unnecessary subscriptions. Tell all the money moochers no. All those people that are always like, Kai, Keisha, Veronica, can I borrow some money? No, you cannot. No, ma'am, no, sir. Right? Make coffee at home. Imagine how much you was. When I think of the amount of money I saved from not drinking coffee out, again, that was a sin, right? Do your own nails. I know that guys might not be doing their nails, but so for the ladies. And then instead of asking for birthday presents, ask for money towards your home buying fund, right? When Marvin and I got married, and I know somebody was on here gonna probably think this is so tacky, but we already owned a home when we got married, even though it was 20 some years ago. We had a wishing well wedding. So we asked everybody for financial gifts, right? Because we had everything that we needed. We had pots and pans and bedspreads and all the stuff. We had already owned a home for 3 years. So we had a wishing well wedding. So think about doing something like that and have a wishing well fund for your home, right? And then don't shop for a year. Only buy the things that you need, because half of us have all the stuff that we need anyway, right? We just buy with our eyes. And then closing costs. Let's talk about what that looks like and why you need it and what does it actually pay for and what is it anyway. So closing costs, which is that 6% we were talking about, that 3%, the money that's needed from the down payment assistance, that's for closing costs, right? So this is what the lender charges you to borrow the money. So when people say there's no money down programs, no, you have to put money down because the lender's charging you to borrow their money. That's what it's for. The other thing it does is it sets up your escrow account to pay your taxes and in your insurance. Your escrow account is the good old city and county down at their office. They have a little account set up when you own a home with your name on it. It's not little, it's a lot of money in there, right? And when your name is on it, it's based on the taxes that you owe on your home for that year and your hazard insurance, which means the insurance that you have to cover your home in the event of a natural disaster, in the event something were to happen. That's what you pay for out of your escrow account. So you never write taxes from your escrow account. It always gets paid automatically from the county. Well, the lender, what they're going to do from the closing costs that you're paying is they're going to take a year of that money, a year of that 6% or a year of that 3%. They're going to create a tax account down at the county or the city courthouse. And every year your bank, Wells Fargo, Bank of America, New Hanover, whoever it is that you have as your mortgage company, they're going to pull that money from that account and it gets paid automatically. And then every time you make a mortgage payment, that fund is getting put back up. The money's going back up again until the taxes come out the following year. So closing costs are also a buyer's expense. It's a courtesy if the seller provides any closing costs. Before 2 years ago, you could ask for all the closing costs you wanted. The seller, you were buying the seller's house. Listen, I need $8 grand. I want $6 grand. I want 7. Pat, I'll take 10 for 500, right? You could just ask for whatever you wanted. But now, no seller, and last year we sold over $5 million worth of real estate. I think one person got closing costs, and it was $3,000. Out of all those transactions, $5 million worth of real estate, one person got closing costs of $3,000 because no seller right now, they know that it's their time. It's a seller's market, so they don't have to pay anything. So that's why you have to have your own money when it comes to purchasing a home. And then seller pay. So I just said that. So seller paid closing costs are a thing in the past, but don't let that discourage you, right? Because there is money available that you can work for to qualify for, and that's what we're here to help you do. And then these are some of the home buyer financing myths. I can only think of a few, but these pop up all the time, right? So rent to own programs. And I used to work for a rent to own investor. So when I tell you it's a scam, not a scam per se, but it is robbery, what you would pay to rent to own a home. You could rent to own cheaper using one of these government loan programs than you could doing a rent to own. And I never saw one successful. From the time that I worked with that rent to own investor, I think I saw one person that was on track to own the home, but it was going to take them another 20 years. And that was one person out of hundreds, thousands of clients that they had. So this is going to cost you more than it will for you to get qualified to purchase on your own. And it's actually against the law, right? Because how rent to own works now, if they do it legally, is you have to be a tenant first, meaning you have a lease. Once your lease expires and you get pre-approved, then they write their offer. But what some of these investors do, or some people that have scams that are rent to own, they'll do a contract that's a rent to own contract. That's against the banking commission. So it's not even legal. Not only that, if you don't have anything with your name on it recorded at the courthouse, you're technically not doing rent to own. They're just taking money from you. Okay. And then I think it's called NACA. I think I've been asked about this loan program for years. And so last year, when a friend of mine wanted to use it, I looked it up. They had only lent money to 3% of the population, which was 300 people across the entire United States within a 10-year time frame. So it's not even a good program. And most of the people that got qualified were like in Detroit. They were in like some metropolitan area, but it was a super small amount. So 3% in the whole country, and they had only done 300 loans over 10 years. So that is not a good program. The down payment assistance programs we talked to you about, they're tried and true. The home buyer agency, the home housing councils, they've been in business for over 20, almost 30 years. So they know what they're doing, and they're HUD certified. Credit Karma is not a good place to track your credit. I know everybody has it, everybody does it, but Credit Karma is off by about 40%. Normally about, not 40%, by 40 points. It's not a true indicator of your credit score. And so that's why a lot of times when people go to buy stuff and they're like, well, Credit Karma said my score was this. Most credit programs, when you're looking at them online, they're not looking at your mid score. They're only looking at your TransUnion and your Experian score, but it's your Experian, I think, but it's your Equifax score. I might be saying that backwards, but it's your mid score that determines whether or not you can purchase a home. It's not your TransUnion score, right? So when you're using Credit Karma and apps like that, it's not an accurate indicator of where you are. That's why you want to talk to a mortgage lender, because they're going to pull your credit and they're going to say, this is where your TransUnion is, this is where your Experian is, and this is where your Equifax is. And that's going to tell you where you are. And then seller financing, this is where the seller will say, I'll be the bank, right? The seller financing is rare. When it is in place, there's higher closing costs. You're normally paying more than you would for a mortgage because the seller has agreed to be the bank. They're the one holding the note. And unless you make sure that the deed is recorded in your name at the courthouse, you don't own it. There's no guarantee of ownership, and you could lose time and money. I saw that a lot when we did short sales. People were basically being taken advantage of and had lost a lot of money. The banks, this is the final myth, is the banks don't want me to own a home, and it's not true, right? It is tough to get the money. It's not an easy process to get the money because you got to go through putting all your ducks in a row, dotting your I's, crossing your T's. But banks are in the business of lending money. They're not in the business of home ownership. So they're not in the business of taking houses back. They literally want to lend you the money, but you have to look like a good risk, like Tiffany was saying. And then selecting a real estate agent. We only need to talk about that. We're your real estate brokers, right? For life, right? So what we're going to do is we're going to help you narrow down your choices. We are highly trained experts, right? And I don't say that lightly. I say that we've been trained, we've been educated, tons of designations that we could talk about to help you get where you want to go and understand the process of home ownership. Agents are a valuable source of information because they're knowledgeable about the home sales and what they sell for, what specific areas are like. But there are three things that we can't talk about as an agent. We can't talk about crime in the area, right? So go to the police records, go to the police reports. I had a client that was under contract. She asked me about police reports. I was like, we're not allowed to talk about that by law. And she found out there was a sex offender living next door. So she was still going to buy the house, but she did her research to find out what was in the area that she couldn't live with, right? If someone dies in a home, we don't have to tell that, but I will, because I believe in demons and ghosts, right? So you can count on me to tell you, but we don't have to tell that. About schools, right? So you go to greatschools.com. We can't give our opinions about a school district. We can't give our opinions of whether or not this is a good neighborhood or a bad neighborhood. You have to do your research as it relates to that. But what I will tell people, because I feel like it's the right thing to do, I'm never going to sell you a home I wouldn't lay my head down in with my family and I wouldn't buy for myself. So that's just a premise that I live by and that I sell real estate by. So you can know that if you want me to sell you a home in the area I would live in and lay my head down at night, I'm gonna say it just like that. I'm not gonna say it's a good or bad area. I'm just gonna say I wouldn't sleep here, right? Because that's the truth for me. And then you don't want to purchase a home via or for sale by owner by yourself without representation. Why? Because half the time they don't know what they're doing. They don't even have the proper documentation. But you also don't have anybody negotiating repairs on your behalf. I have a client that we just sold a home to about 3 months ago. She was going to buy directly from the landlord. He had agreed to fix all this stuff and had not done anything. So when she finally hired us as her broker, we now have to go back and renegotiate all these things that he was not going to do. So that meant that she would have been buying a home that she then had to turn around and put money into after he had already promised to do it. So you don't want to represent yourself in a real estate transaction. And 90% of the time, that number is really higher, but I wanted to be, what's the word I'm looking for? I can't think of what I'm looking for, but I wanted to think on the lower side. 90% of the time, the seller covers the cost of your buyer's agent. So you get us for free, right? Which means you get exclusive representation to purchase a home, walk you through the process, hold your hand through the process, understand everything about the process, and you don't even pay for us. Your 3% and your 6% is all pays for you, and the seller pays us for your exclusive representation. So that's a lot of times too why they don't want to pay closing costs, because they know they have high broker fees. And then you don't want to try to go through a builder or an independent company without broker representation, because you stand to lose a lot of money. And I gave example of these companies, and I'm not dogging them out. I'm just sharing with you, do your research, read the reviews, Red Door. What they're not a bad company to build a home, but what happens is when you have a land home package and you say, well, I have a lot, I'm just gonna build my own house. They're not telling you the cost for grading. They're not telling you the cost for land clearing. They're not telling you the cost to build, to put the septic in. You don't know how far the septic line is from the main road to your house. You don't know how much the repair area for the septic costs. Do you have a well? Is it an artesian well? How much is the well? There's all these other fees and costs, the cost for framing, the cost for all the subs, all insurance, all these things, and they become all these added expenses when you're dealing with a Red Door and a Schumacher Homes. Also, when you're dealing with a Schumacher Homes, they won't let you have an agent. So if you contact them and say, hey, I'm interested in one of your products, because you can see them off of 95 when you're going to the outlets or going to New York or DC, if you're going up I-95 North, you'll see all those pretty homes on the side of the road. But if you call them, they're going to say, okay, do you have an agent? If you say, yes, my agent is Tamika, they're going to say, okay, well, Tamika, hey, thank you for bringing Regina into the service center or the showroom on today. Here's your 3% commission. Regina, I'm going to hold your hand. We're going to take you through the process. They literally pay your agent to go away. So you really want to do your research when you're dealing with companies like that online. So obtaining financing. Before you shop for a home, you must shop for a mortgage. Most people will come to us when they first get started and they'll want to go look at houses, and we won't do it. I personally won't, and I train and coach my agents not to either. Why? Because you don't know your bargaining position. It's like going to the grocery store or going to the mall or going to the outlets. You would not go to the grocery store or shopping for clothes and shoes and not know how much is in your account. It's the same thing when you're going to shop for a home. So when you're working with a professional is going to say, hey, before we get started, Kristen, let's talk to a lender, because when we take you out here, we want you to be ready to go. When you find the home that you're ready for, the home of your dreams, we want you to be able to say, hey, here's my pre-approval letter. I'm ready to go. I got my money. I'm good, right? We don't want you out there trying to figure it out, and it's not a good use of time. So I would just share with you, now some agents maybe in another firm or company will do that, but here at Fusion Properties, we will not take you out without a pre-approval letter, because we want the best for you and want you to have a great experience. And then when you get pre-approved, you have a better idea of what you're working with. Sometimes people get pre-approved and they get pre-approved for more than they thought they could afford. Isn't that a good feeling, right? Because maybe you're out here wanting to go look at houses, but you're looking beneath your purchase price and your purchase amount. As professional brokers, again, we're not going to show you the home without the letter. I want you to take a picture of this screen just for your notes. But this is what a mortgage lender is going to look for. This is their checklist, right? And they're going to ask you for all these documents. And in the beginning of the home buying process, it's going to feel like you're being documented to death. Like, do y'all want blood in my firstborn too? That's how most people feel, right? But think about it. Someone that has never met you is lending you $250,000, $250,000. They're lending you $100,000, $150,000. And they've never laid eyes on you. And all they have to determine whether or not you're a good risk to give that money to is this information, right? And to see if you're telling the truth about the things that you're telling them. So they're going to want your last 2 years of tax returns. They're going to want your last 2 years of W-2s. They're going to want a copy of your driver's license to make sure we're not taking out loans in somebody else's name. They're going to want a copy of your earnest money deposit check and contract once you're under contract. They're going to want an explanation letter of any deposits over $1,000. We'll talk about that further back. And then your most recent pay stubs, your most recent bank statements, your 1099 or business license if you're a self-employed person. We're going to talk about that because one thing that is challenging is when you own a business and that's your sole source of income, it can be so hard to purchase a home, but there's a way around it. An explanation letter of any credit inquiries that you have, and a divorce decree or separation agreement. We're going to talk about that too, right? Further in the next slide, but take a screenshot of that. I'm going to leave that up there for just a second, and then we'll go ahead on to the next screen or slide. I just want to make sure everybody has a chance to look at that. Sorry about that. I'm just checking the chat to see if we have any questions. If you have questions, pop them in the chat. We're going to do a Q&A at the end as well. Okay, so moving on to the next one. These are loan types, and I realized I left one off a second ago when I was talking. So let's start with the most popular one. An FHA loan, which is the Federal Home Loan Association, is a government-backed loan that most people use, right? Most people that are non-military related or first-time home buyers or buying a home, they normally use an FHA loan, right? It requires 3% down, and the home must be move-in ready. You cannot use an FHA loan to buy a foreclosure unless that foreclosure is move-in ready, right? I get a lot of times people will say, oh, I want me one of those foreclosures. If it has a hole in the roof and a hole in the floor, it looks like Satan's living there, you can't use an FHA home loan to buy it, right? It has to be move-in ready because it's a government-backed loan. They want to make sure that they can get their money back, right? VA is a government-backed loan that can be used by all veterans who've served, I think it's for at least 6 months, but Paulette can unmute in a second. Well, unmute when you can and let me know if that's right, because we just came across that with another buyer. They can purchase up to 4 times, not 4%, 4 times of their entitlement, and a VA loan can be used multiple times. In other words, let's go back to FHA. So with FHA, you can purchase any residential property, and a lender considers residential property, single family residential can be a home, a duplex, a triplex, or a quadplex, right? So you can use an FHA loan to purchase a single family home, a duplex, a triplex, or a quadplex. Once you get to that 5th property, that's commercial, right? But a 1 to 4 unit dwelling all under the same roof. So you can't purchase 4 homes and call it a quadplex, but if all 4 of those living spaces and all 3 living spaces, 2 living spaces are all under one roof, you can use an FHA loan to buy that and put 3% down. The VA, a government-backed loan, cannot be used to purchase investment property. So you can't use a VA loan to purchase a duplex, a triplex, or I don't know, I don't think you can, I can't remember. So don't quote me on that one. Paulette just unmuted, but go ahead, Paulette.
Yes, with the VA loan, you actually can purchase as long as duplex or fourplex,
Okay.
as long as you live in one of the units.
Okay, thank you.
Yes,
Then how long did you have to, do you have to serve? I can't remember what happened with that client, but how long do you have to be in at a minimum to use VA?
180 days or longer.
Okay.
The minimum is 180 days.
Okay. She's so technical, right? I'm like, how many months? Ain't that 6 months, right? That's
Yeah.
how you know somebody's been military. They like 180 days. I'm like, wait, let me do the math. I'm non-military, right? Thank you for that, Paulette.
You're welcome.
And so super cool to know. So VA is a residential only loan. You cannot purchase investment properties with a VA loan. You cannot purchase a vacation home with a VA loan, but you can use it multiple times, and you can use it up to 4 times of your entitlement. So let's say what that means. So let's say that Paulette owned a home in Fayetteville, and she used and she had entitlement of $416,000, and she used $100,000 of that money. She still has $316,000 that she can use as long as her credit and her income would support it. She can go buy another house somewhere else, but that second house has to be at a minimum $144,000 or higher. She can't buy an $80,000 house. She can't buy a $130,000 house. To use it a second time, it has to be over $144,000. And you have to have orders most of the time for where you're going with your VA loan, but you can use it multiple times.
Yes, that's what I was gonna say, Gerlinda. It used to be you could do it as a second home, but now they've changed it where you have to be on active duty and you're PCS in order to get the second home for the VA, because you have to have, it has to be your primary residence, and so you can't live in two places at one time unless you are PCS or moving.
Thank you for telling us that, because a lot of times people will want to do that, right? Well, my mama had a VA or my daddy had a VA. You can't use anyone else's entitlement, right? It can only be the veteran that's using their entitlement. And if you have a married couple and each of them has a VA, you only want to use one of them. You don't want to take 50% of the husbands and 50%. I don't even know if you can do it or not. And 50% of the wives. You only want to use one person's one person's VA. And then USDA. This is such an untapped loan, and it does get turned down a lot right now in the seller's market, only because most sellers are told by their agents that it takes too long, when it doesn't. It takes about 30 to 40 days. Now in mid-year, about April or May, when their funding is being reallocated, there's like a little cog and slow down during that time. But USDA is United States Department of Agriculture, and normally it was for homes that were in a rural area. So Spring Lake used to be considered rural, Hope Mills used to be considered rural, parts of Ramsey Street used to be considered rural, but now that's not the case, right? So all of that has been annexed into the city, and a USDA loan is only in an agricultural area: Hope County, Harnett County, Lee County, Moore County, any other Robeson County, Sampson County. So that USDA provides an incredible opportunity for a literally 100% loan program. In other words, you only need, I think, 1.5% to put down. So when you think of a no money down program, it's not no money down, but it's not 6% either. It's 1.5%, and it just has to be in the county. And how you determine that is there's an eligibility map. So what we do is when you're looking for a home and you say, okay, I specifically want to go USDA, they do have a bit of a higher credit requirement. It's not that much higher. I think it's a 640 or something. Tiffany can tell us, but there's a higher credit score requirement, I think, than FHA or VA. I'll go back and tell you what those are. But with USDA, and you found a home, and let's say like I have a home at 171 Rolling Pines, it's under contract, we would plug that address into the eligibility map, and it's going to say qualifies, not qualifies. So that is a really excellent loan program for someone that is willing to live out in the county or in the outskirts, because it provides an opportunity. You can't own any other homes and purchase via USDA. I was trying to think of one other stipulation. It has private mortgage insurance, but we won't talk about that right now. Tiffany, do you remember what the minimum score is for USDA? And not to put you on the spot, just if you know.
No, I was listening to you. I don't.
Okay.
I don't for that.
Like 640 or 645, but we can find out and tell you for sure. With VA and with FHA, you have to have a minimum of a 620. Now there are loan programs out there. Thank you. There are loan programs out there where somebody will say, well, if you have a 580, I'll give you money. I wouldn't do that, y'all. You know, only because you can get 40 more points. We can work with our lender partners to help you get the 40 points that you need so that you can get a good interest rate. Because the last thing you want to do is come into home ownership at a point where you're already at a deficit, right? Because the interest rate is going to determine your monthly mortgage payment, and you want to get the best one that you can. So you want to really be at a minimum 620, and you don't want any of those predatory loans. That's how people end up in foreclosure. The fourth loan type is the FHA 203K loan. Is used to renovate properties. Very few lenders offer this loan type anymore. It is a good loan. It does take a long time. It takes about 6 months to a year. It is super detailed. You can only use an FHA inspector. You can only use an FHA appraiser, and they have to be certified by the government, and they are very few and far between. So let's just say you see a home that's 120 years old. I'm just using that as an example. It could just be an old home. But it has good bones, and you're like, okay, I want to do an FHA 203K renovation loan. Well, one, you have to qualify for what the home will be valued and worth after it's repaired. right? So it couldn't be, let's say today that the home is listed at $100,000, but its after repair value is $250,000. If you can't qualify for its after repair value of $250,000, you can't use a 203K loan, because they're gonna take the whole laundry list of everything that the contractor says needs to be done. It has to be a FHA 203 rehab contractor certified through them. After he says this is the list of everything that needs to be done, they're going to take that list and determine its after repair value or its ARV, and that's what they're going to loan you money on. So that's the number you have to qualify for, not the purchase price of its as is condition. So that's, a lot of people don't use that loan type because they end up getting thrown out of qualification. Then the fifth loan type that I don't have on here is a conventional loan. A lot of people over the last 2 years have started using conventional loans because one, you have to put 5% down. I believe they don't have private mortgage insurance, but the other thing is they're not as, the appraisers aren't as picky. So when you're buying a home that needs some work, if you're using a conventional loan, the seller looks at you more favorably as a buyer. And it's not as picky, meaning all these repairs are going to be required, which will make the seller have to do more work and spend more money. So you look like a positive loan choice to most sellers. So that's the only one I don't have up here is conventional, and it is 5% down. Okay. And then any type of down payment assistance that's added, that you use, is added as a second mortgage. And it has to be paid off before the home can be resold. So I'll give you an example. You got $100,000 and you decide to use down payment assistance, and let's say you get $6,000 from the state. You have a first mortgage for $100,000. You have a second mortgage for $6,000. Before you can go and sell that home, you have to pay back the $100,000 and the $6,000. Let's use the example of the $30,000 down payment assistance. You have a $200,000 home that you're looking to purchase. You get a mortgage for that. You borrowed $30,000 in down payment assistance. Before you can sell that $200,000 home, you got to pay back $230,000 to two separate agencies. It's seen as a second mortgage. So you just want to know that. Some people don't know that. They think they have one loan and one mortgage payment, but really it's a secondary loan. Okay, and then these are what your loan terms look like. For most first-time home buyers, you're going to do a 30-year term to pay off your mortgage, and that's appropriate. Some people do a fixed mortgage, some people do adjustable rate mortgage. I'm going to talk to you about both of them. I personally, just my personal opinion, don't recommend 15-year mortgages. The reason being is 15-year mortgages are more expensive, right? Because you're shortening the time frame to pay the home off, and by compressing the time frame, your payment's higher. But what you could do is, if you get a 30-year mortgage, it gives you a lower payment amount. You could make one extra payment a year, right? You don't even have to make extra payment a month or extra money make one payment to principal extra a year. You're going to pay the home off 7 years, so within 23 years. So if you decide, okay, I want to pay the home off in 15 years, determine how many years you need to make one extra payment a year to get a 15-year mortgage. You still benefited from a 15-year mortgage, but you didn't have those double payments that you were making every month. And so that's why I think a 30-year mortgage is better. A fixed rate mortgage is one where you pay the same amount every month, right? That's really ideally what you want. But an adjustable rate mortgage is something that a lot of credit unions offer. So like State Employees Credit Union, maybe Federal has it, Pentagon Federal Credit Union. Most credit unions have arms. And what it is an adjustable rate mortgage. And what it does is it offers a lower interest rate for people coming into the market that maybe don't have, maybe their debt to income ratio is a little high, or maybe it's their first time purchasing a home. They don't have a lot of credit, or they don't look like a great risk, but the bank is like, they service their own loans. So they're like, hey, we'll lend you the money. And then so year 1, year 3, year 5, or year 1, year 2, and year 3, your payment goes up in steps. It's an adjustable rate, so it adjusts up over time. So some people do start out that way. I remember our very first home when we were 27 was an ARM. It started out at 8. And if we would have kept it the second year, it would have gone to 9 and then 10, right? Because the 8% was the rate at that time. But what we did was, at the end of the first year, we refinanced and got a fixed interest rate. So just know that an ARM isn't horrible. It's not what we want you to start with, but if that's where you had to start, do it, right? Because you can always refinance at the end of those terms before the rate jumps up or before things change financially. And then we've finally made it to the last couple of slides. I want to own a home. What's next, right? Call the person who invited you from our Fusion flyer or social media, wherever you saw us, and let's have a free buyer consultation, right? It does not cost you anything to work with an agent. If an agent tells you, hey, it's going to be this amount, if it's $1, you don't want to do that, right? Because working with a broker doesn't cost them anything, doesn't cost you anything other than time. And then what we're going to do after that is we're going to connect you with our mortgage lender partner. They're going to tell us the blueprints and the next steps. They're never going to tell us your financial information. They're never going to say this was Lisa's credit and this was Tamika's credit and this was, Veronica's credit, Kristen's credit. They're never going to tell us what your credit looked like. They're just going to say, this is the plan I created for them and this is where they are and this is how we can get them to where they want to go. Now, we'll tell you that a lot of these lenders are helping a lot of home buyers, so it could take anywhere from 24 to 72 hours to get a call back, right? We've tried to do our best with eliminating lenders that cause frustration. Somebody on here can attest to what I'm talking about. Those that don't get back to people in a timely manner. We have a group of lender partners that are excellent about servicing our clients. And then get your paperwork in order, right? So when you submit your file, it's a completed file. The worst thing you can do to slow your time down is piecemeal stuff together. So remember that checklist I said, take a picture of, and I'll go back to it at the end. Your mortgage checklist, have all that stuff already ready to go, but you're gonna have to upload it into their system, right? Most lenders are gonna have a link that they want you to send it to. It can be a screenshot, right? Thanks to technology. It can be faxed, it can be scanned. It can be airlifted, I'm just kidding. But it's easy to upload and you're gonna need it all in one place at one time so that they have a full picture of where you are financially and they don't have to keep calling back asking you for stuff. It slows the process down. And a lot of lenders, they won't submit your packet for review to see if you can get pre-approved until they have every document. So that's why it's important to put that together. The next thing you wanna do is ask your Fusion Properties realtor, that's one of us, to send you or email you the steps in the home buying process so you'll know what to do once you get pre-approved. It's just a 2 little page document with 10 steps on, I want to purchase a home, what's next? And that's only what will happen after you get pre-approved. And then are you self-employed? Oh my God. So this is my 32nd or 33rd year self-employment, right? I think somewhere in that time frame of 33 years of working for myself, I may have had 2 or 3 jobs, right? I was a horrible employee. I'm just kidding. I just didn't like working with people, but it's tough when you are self-employed and you don't have a paycheck. It's tough to buy a home. When you go to buy a car, you get these ungodly interest rates. So what can you do as a self-employed person to build up your credit and to save the money that you need to get to be able to purchase a home? These are just some of the things that I've seen and that I've been told would work. Thank God I have a husband that got the mortgage, so I didn't have to worry about doing that. But when I was thinking about doing it on my own, this is what the tax professional and the lender told me, right? So our lender is going to require 2 years worth of tax returns. The challenge with that is as a self-employed person or business owner is you've gotten so many write-offs and deductions that it looks like you don't make money and that you have a loss. And a lot of times it's cash in the hand. So what you have to do, and this is what the tax professional told me, because I do want to purchase an investment property in my own name through the business, right? And he said for 2 years, you're going to have to show a profit. And you have to show a profit for the amount that you want to get qualified for, the amount that will qualify you to purchase a home, right? That's one way. So in other words, you want to sit down with your accountant, your tax professional, whoever does your taxes, and say, listen, I want to purchase a home. What amount of income do I need to show so that I can be able to be in position in 2 years with 2 years worth of tax returns to purchase a home? The other thing you could do, and this is what we did 1 year to purchase an investment property, and we purchased it together, I was able to be on the mortgage, is we made ourselves employees of our corporation. It is more expensive to do it that way, but when you make yourself an employee of your corporation, you go to your accountant, you would go to the tax professional, and the accountant would set up payroll. And every week, every 2 weeks, or once a month, you pay yourself just like you're an employee. Just like if you were working a regular job as a manager, an executive, wherever you work, except for you're Lisa Moore, employee of Lisa Moore Inc. You're Sherrod Hayes, employee of Sherrod Hayes Inc., right? And you show up as an employee. So what we did was we wrote payroll to myself and we wrote payroll to my husband, and we did that for 2 years. The reason why I say it's expensive is because payroll taxes are the devil, right? But you're gonna have to make a sacrifice as a self-employed person for those 2 years only so that you can get what it is that you want. So those are the two ways that as a self-employed person that you can begin to be able to create home ownership, right? That's the best thing that you can do. The other thing that you want to be able to do you could put 20% down, you could do cash, right? You could pay half cash and a loan for the other part. You could do a personal loan. It just depends on the amount of home that you're trying to purchase. And so those are the things that we kind of walk you through and help come up with when you're purchasing a home. If you want to buy a home in your business name, right? You want to be able to establish business credit. So you want to get a DUNS number. You want to open up a Capital One Spark card, right, to begin to establish business credit. But you also have to be able to show a profit and loss statement, right? Even as a self-employed person, the lender is going to ask you for a profit and loss statement. So we can talk about all that, but those are just some ways as a self-employed person, some things you need to start doing now, right? Let's see what questions you have. So foreclosed homes, they're so few and far between. We used to have gobs of foreclosures, right? You could stumble over a foreclosure. I think that my first home I ever purchased was a HUD home. It was a townhome. We paid $100. Literally, we had $1,000. We put it down. We got the $1,000 back. Plus, we got an extra $100, and we own that home forever and a day. So I'm a fan of foreclosures when you can find them. The only challenge in our market here, in all markets across North Carolina, where there's a lot of home buying activity, is the investors they're bidding up the price of the foreclosure, and they're really making it harder and more challenging for people that want to buy either foreclosures for investment properties or foreclosures to live in. But that's why you want to work with a broker that knows the back door, right? And what I mean by that is I'm going to hunt down a property for my client, because everything you want or the home you want might not be listed. It might not be in Zillow. It might not be in Trulia. It might not be on homes.com. But if I'm an active professional working agent, I'm going to hunt down a property for my client. If that means that, and Sherrod is really good at this, so shout out to him. Sherrod goes door knocking, right, in different neighborhoods. And what that means is he's asking the sellers, hey, I have the home down the street on the market for sale, or have you considered selling? You know, are you renting? Are you consider buying? Have you considered buying? And so we're actively out here in the neighborhoods looking for inventory, looking for opportunities. So the one thing to answer that question to reference foreclosures, maybe you want to consider a short sale. It's a long process. It's not a short process, but I think I've closed over 100 short sales. But think about that. That's someone that's losing their home that has asked the bank to allow them to sell short of what they owe on the mortgage. And it presents an incredible opportunity for the person that's willing to wait it out, because it could take 6 months to a year. But that gives you time to get your stuff together. But I will say right now, based on where we are in the market, because people have so much equity in their homes based on the market's being driven up, that's why you don't see a lot of foreclosures. You don't see a lot of short sales, because people have a lot of equity in their home. And they can use that equity really I don't know if that part is right or wrong to say that, but they have a lot of equity in their home. So it'll take them a minute to get to foreclosure. At least that's what I've seen. But I'm gonna let Tiffany unmute and ask her what she has seen as it relates to foreclosure, since I know that she has done some foreclosure prevention.
Yeah, I have. And right now, as you said, like a lot of people, when it comes to foreclosure, don't have to really do the foreclosure because they are getting a second mortgage and taking out the equity in their home to help them to not become a foreclosure client or a foreclosure home buyer, pretty much. And so we, as counselors, we try to steer people away from doing foreclosure. So If we can, we will do a modification for them, work with the bank and see what we can do about getting that payment lower, payment plan. And or hey, sometimes you have to use that big old B word that people don't like to say a lot, but bankruptcy.
Oh, God bless it, right? And speaking of that, so now when someone does have a bankruptcy, how long, now I know this is a lender question, so if you don't know, it's okay. But is it 7 years that before people can then go and buy again? Or is it after the first year or after it's been discharged? Do you know?
Yes, I do. It has to be discharged, and usually time discharge takes 7 years, depending on what bankruptcy, because it's a bankruptcy 7, bankruptcy 11, bankruptcy 13. So depending on what bankruptcy they go through, they'll have to do the discharge. And then once they do the discharge, they have to rebuild their credit for 1 year after the discharge.
Okay, awesome. And so thank you for sharing that. And so that's the type of stuff that we can help you with as agents, right? Just not to belabor the point about the foreclosure, but I do want to say this. Be flexible about the area where you're willing to stay in. So like, I won't say the city, right? Because I want you to call us and work with us. But there's one little close by city that all of their foreclosures from Matthew and Florence from the floods we had, 4 or 5 years ago, are starting to hit the market. Now, mind you, you can't use an FHA or VA or USDA to buy these. These have to be conventional or cash. But in this cute little market, well, it is cute to me, but it's about 45 minutes away. But if you're willing to live out there, right, and let's say it is a move-in ready foreclosure, you could use USDA. But let's say that you're someone that wants to invest in real estate, that is a great area to invest in, and we'll tell you when you become our client, right? Because we got to keep some little secrets close to the vest. So let's go to the last two slides. Did I do that already? Okay, I want to own a home. What's next? No late payments for 12 months. We talked about that. It'll throw you out of qualification. But if you were late in December, so what? Dust yourself off. Let's work from January to next January. We have a year. A year will go by fast. 6 months will go by fast, right? Do you pay rent in cash? Stop. Don't do that anymore. Begin to pay via money order. Open up a bank account. Keep a ledger. Ask your landlord to do the same. Rental verification is everything. If you can't show proof of paying your rent, I had a client and she only paid her rent in cash. It didn't happen, right? She had to wait 6 months to show where she had been paying for 6 months, and then the landlord was willing to write a letter, but it was a process, right? So don't pay rent in cash. Don't pay your landlords in cash. And if that's the only way that they want to get paid, let them know, listen, I'm sorry, I'm in the process of purchasing a home. I need to be able to pay you via money order, some way that it can be tracked, and keep your money order receipts and keep them in order, because you're going to need 12 months of it, right? If you're missing a month, it's going to suck, right? Because these lenders are strict. So you need a month worth of rental verification and rental history. If you live with your parents and you pay rent, tell your mom and daddy, listen, I'm going to start paying you a money order, and I need you to verify that you received the money, because I'm going to be able to purchase my own home. So it doesn't matter if you're a roommate and you live with someone in someone else's home, whoever you all pay that rent to, pay it via something that can be tracked so that you can use that for rental verification. If you settle a bad debt, get written proof of it, no exceptions, right? Because the lender is going to say, hey, I need a letter from this person. I need a letter from that person showing that that debt has been settled, right? If you're getting a divorce, I say this to clients all the time, or if you're in a bad marriage, because we're your counselors, right? We're your team members, and we're supposed to be honest. We owe you these things according to the Real Estate Commission. It's called LOADS, right? Loyalty, obedience, accountability, skill, and diligence in negotiating a contract. So if I work for you exclusively, I should tell you the things that could happen, good, bad, and ugly, right? If you're getting a divorce, you want to have your spouse sign a release of marital interest before you buy a home. Don't do it, right? You buy a home in North Carolina, whether you're married in the middle of a divorce or a separation, what's his is yours and what's yours is his. It's a tenants in the entirety, right? What that means is, as a married couple, regardless of what you owned prior to getting married and whatever you owned after getting married, unless someone signed a release giving up all their marital rights, it's 50-50, right? If you're if you're in a bad relationship, don't buy a home if you know that things are rocky, because the minute that you all get married, it's 50-50. And in North Carolina, this is the real estate kind of lingo that we have to go by. It takes one to buy, meaning one person can buy the home all day long. But if you're married, it takes two to sell, right? So one to buy, two to sell. Don't buy a car or furniture or make large credit purchases. We tell people this all the time, and for some reason, I don't know, they believe HGTV or DIY more than they believe us. If you buy a car, furniture, or make large credit purchases and it affects your score during the home buying process, you can get kicked out of buying. It doesn't even matter if it's a day before closing. The lender could be like, nope, I'm sorry, it's not gonna work. Your debt has thrown you off. Like, there's been people sitting, I have not personally, and I pray to God I don't have this experience, sitting at the closing table at the U-Haul, but they bought a car, now they can't even buy that home. So we don't want that to be you. During the process of buying a home, do not deposit large amounts of cash that cannot be tracked or explained. You're gonna look like you're working for the Taliban, right? Just kidding, right? But it looks like money laundering. So you have to justify and be able to explain every large deposit that goes into your account. So when you're purchasing a home, what I tell people is if you have a checking account and a savings account, any account that you're not using to qualify, let's say it's your savings account, because you don't have to tell them you have a savings account. You only have to show the one set of bank statements, but use your best bank statement, right? But if you have a savings account, put large deposits over in there, or put that money in your mattress until after you close, because the minute that you put money in your account that is a large sum that cannot be tracked or explained, you throw a monkey wrench in the whole process because it looks illegal, right? And then tell your family your goal and get buying them from them so they'll understand that sacrifices have to be made, right? So then it becomes a, hey guys, we're buying a home together. We're, putting this money together for all of us so you can have your own room. So you can have your man cave or your she shed, but get buy-in from your family so that everybody works together in doing that. Second thing I'll say on that is you can purchase a home with your mom. You can purchase a home with your dad, right? You can all be the both of you can be co-borrowers together. I've met a lot of women that are purchasing homes with their mothers because the mom is moving in, and so the mom actually helps the person qualify for the loan. But you both have to have good credit, and you both have to be able to qualify. So just so you know that. And then I just want to tell you all, thank you so much for attending. Fusion Properties, that's who we are. In case I did not get to meet some of you that hopped on later, I'm Garlinda Price. I'm the broker in charge. And our slogan is from the capital to coast. We want to be your realtor for life. The areas that we work in and represent is we're in the Triangle MLS. So that's Raleigh, Durham, Chapel Hill, Zebulon, Wilson, Rocky Mount, you name it, anywhere up in the capital area. Down to the coast, we're down in Wilmington, Onslow, New Hanover County, anywhere till it touches the tip of South Carolina. We don't go to South Carolina. And then all the way over here, of course, Fayetteville, Fort Bragg, Hope, and Harnett County. We're also hiring North Carolina real estate brokers, new or experienced. So if you're thinking about getting your license, we'd love to talk to you. And I'm going to stop the screen share and stop recording so we can open it up for questions. I don't know really the systematic way to do that where it's not chaotic. Other than I could just start and go down the list of people that I can see and just see if you have any questions right quick. Or if there's a raise hand feature, then go ahead and use the raise your hand feature and then we'll take questions from there. And if you don't have any questions, you can let me know. We'll hop out, but I want to thank all of you all for hopping on here tonight, and we'd love to connect with you just to help you get started in your process. Please.